Okay, welcome again, everyone. Thank you for taking the time to be here today. Let's get officially started and welcome to today's webinar titled The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I'm the manager of retirement services here at VectorVest, and I'm really excited about this presentation. I hope that you guys are as well. In fact, my promise to you today is this. In this webinar, I'm going to show you how you can build wealth, transform your legacy, and live financially free. And some pretty lofty goals here, and I'm sure that you probably get flooded with emails and other things promising to help your retirement, and you're probably a little skeptical and are thinking to yourself, yeah, well, go ahead and prove it. I'm going to do my best to show you how you can take control and build and manage your retirement portfolio. Now, here at VectorVest, we've been doing this since 1988 is when VectorVest began. This is just one example. In 2017, I began a retirement growth portfolio, and I'll talk about the process and the type of stocks and how we do this. But you can see in just about, well, I guess in January it'll be about 5 years, right, where this portfolio has tripled. Right, there's over 200% gain from 100,000 to 214,000. That's about a 45% annualized rate of return. We also will talk about how to generate income in your retirement portfolio today. So another strategy we use, this is a little longer term. This goes back to 2013. This is using dividend stocks, dividend growth. And this really just indicates the capital appreciation, this particular equity curve here. This is just the capital appreciation. This does not include the dividends, which I've calculated to just under $55,000 now. And that doesn't include, obviously, the ability to compound or reinvest those dividends. So here's another very strong portfolio. I'm also going to discuss here today the ability to, we all remember what happened in February of 2020, how you can hedge or insure your portfolio and mitigate these drawdowns to a very large extent. So this is what we're going to focus on, and this is what I hope to build a nice foundation on for you. Now, one of our clients, Jerry, he told us about his ability to generate consistent monthly income now after going through our training. Okay, he went from being what he described, these are his words, hit or miss with his trading and having no methodology, to where he's now generating over 2% extra each month. So the point is, this webinar is built on results, and I'm going to show you the system we use to achieve these results. So if learning how to do that sounds good to you, now's a great time to kind of turn off all the distractions, right? Close your door. I know you're not going to turn your cell phone off, but maybe put it on vibrate, close down any windows on your computer. The idea is not to multitask. I don't want you to miss anything important here. I do believe you'll be learning something that can make really a huge positive impact on the rest of your life. It sounds, again, uh, very high goals we're setting, but I believe we can do that. So here's how to know if you're in the right place here today, right? The reason you showed up. Here's how you know you're in the right place. Let's walk through it. You're in the right place if you're worried about the next market collapse wiping away a good chunk of your nest egg, and it's causing you to be so conservative and so nervous about investing that you're not getting the gains that this market has been offering or that others are getting. That might be one reason why you're here. Another one is that you're trying to grow your account steadily each year, but every time you buy something, and we know nothing goes straight up, but your stock or the market drops, and you spin your wheels. Okay, that might be why you're here. You also may be here because you don't have an income source that is steady enough or big enough for your needs, and it's causing you to scale back your lifestyle and to not do the things that you want to do. Maybe you're here because you fear you won't be able to retire when you want, and you might need to rely on others to take care of you. Okay, that's probably the tough, for me anyway. When I think about it, that's the toughest reason. And then finally, you might be one of the many people who are older, over 65, who still have to work, not because you want to, but because you have to. Right? There's nothing wrong with, listen, to me there's a difference between having to have a job after 65 or 70 and working after 65, right? You work because you want to. When you have to get a job because you have to, that's not the retirement we want. So um, I'm guessing those are some of the reasons that you're here. And so I'll ask you guys, as I said, we'll try to interact throughout the presentation. Does any of that ring true to you? Any of those, any one of those? You can type in. Like I said, we want to be able to interact. It takes a second for them to come, and here they start to come. So Ed says, yes, right. And Dave says yes. Russell says most of those are me. Joe also says all of them. Brian and Phil are also saying yes. And yeah, listen, it's only natural. It hits a lot of us. Listen, a couple of those in there still I think about and worry about myself. Um, so that's why we're here. Okay. So I think we're all in the right place. And the reason is because after decades of working with retirees here at VectorVest, I've been at VectorVest for over 15 years. Like I said, VectorVest has been around since 1988. And what I believe that we've identified is the root cause of those points I just went over. And that is that your retirement investing model is broken. And all it takes is a couple of minor tweaks, perhaps maybe some major ones for some of us, and you can get it fixed. And once you fix it, now your retirement will be on solid footing. And that's what we're going to do today. Right? That's what we're going to do today. The model we use, and I believe that we have proven to work, is what we call the 3Ps investing model. Right? The 3Ps, as we call them, are profit, okay, which is a plan to grow your portfolio safely and steadily each year. That is through capital appreciation and buying good quality stocks rising in a rising market with a proper risk management technique in place. Next is provide. So when you think of provide, think of simply providing income. It's just a system to generate a safe, steady, consistent income. And then finally, the most important one to me, preserve is a protection plan for capital preservation. Right? To me, preserving your net worth when we're talking about retirement-minded investing is the most important part. I didn't tell you guys a lot about myself. Before I came to VectorVest, I was a market maker on some smaller trading desks, and then I worked for a larger market making firm before coming to VectorVest. And then 2 lifetimes ago, I was a police officer in Connecticut, and I always laugh. I took an oath to protect and serve, and that's what I'm trying to do here now in a different fashion, is convey to you the importance of being able to protect your net worth. Okay, so those are the 3Ps. So remember my promise from earlier to build wealth, transform your legacy, and live financially free. You need to grow your investments, generate income, and protect your capital to do that. Okay, the 3Ps. And when you do that, that's when we can achieve financial freedom. Those are not my handcuffs, by the way. So the first shift you need to make is the shift from not being in control of your retirement to where you take control of your retirement. Okay? Because after all, who cares more for your money, you or someone else? You might think you don't have the time or the knowledge or the skill to build and manage your portfolio, but you're going to see today, hopefully, if I do my job, that you can do it. It doesn't take a lot of time, although it does take some time. Right? You got to put some effort into it, but it's not as if you're in front of your computer 8 hours a day trying to do this. You will have the knowledge that you need. I'm going to lay that out for you. And then I'll show you how to leverage off others so you don't have to do everything yourself. And I'll explain what that means in a little bit. So again, another shift that we talk about, right? Or the first shift that you need to make is the shift from not being in control of your own retirement to where you take control of your retirement. Okay. So that's what we're looking to do. Now that you've decided to take control, that's why you're here. Let's look at the 7 signs that your portfolio will not be ready for retirement. There are 7 very clear signs that you are not ready for retirement. Even though most people say they care more about their money than anyone else, what do most people end up doing? Well, They fall under these bullet points here that I'm talking about. Number one, most people will rely on Social Security to provide income they need to retire happily, and it's just, there's a lot of problems behind that, as we know. Right now, in a study I read about, 60% of non-retired workers feel Social Security won't even be around when they retire. And even if it is, the Social Security website says right on its own website that Social Security was never intended to be someone's sole source of retirement income. Right now, the average, again, just rounding it, the average Social Security benefit is just over $1,500 a month. That's before Medicare premiums are deducted. So on average, you're left with about 16 grand a year. Obviously, that's not going to be enough. So what do most people do? Well, point number two here is a lot of people just save their money. You put your hard-earned money away, counting on it to be there when you retire. However, right, we have to deal with things like interest rates, and they're so low right now. And while they'll begin to rise at some point, but how soon, we don't know. And as we saw today, inflation is actually higher than interest rates. We know that. So by saving your money, you're actually losing money because your dollars are getting devalued. So just, kind of stashing it away, while it's good to put some away and keep it safe, that's not what we want to do with our entire allocation to the markets. There are others who just, what we call, take a set it and forget about it approach. Put your money into mutual funds, an IRA, a 401k. That's great. That's where it should be. But then you just hope for the best and you take no interest in managing it. Unfortunately, when the market drops and wipes out 30 or 40 or 50%, many people end up delaying their retirement, or for those who are retired, may have to go back to work. Okay, and next, here's the tough one. When all else fails, you can always play the lottery, right? Remember there was a commercial a long time ago that advertised the lottery. It said, all it takes is $1 and a dream. Well, for many, that $1 turns into two, then into 10, then into $50, right? A day or a week, whatever it comes to. Sometimes you end up spending a few $100 a month on those dreams. And, the one thing I can guarantee you here today is that is not the best retirement plan for you to have in place. Now, the other thing you can do, and what a lot of folks will do when they don't feel like they're ready for retirement, is hire someone to make decisions for you. And that's what Rob here did. And he retired in 2005, one of our subscribers. As we all know, the financial crisis hit in late 2007 into 2008. And he wrote us, he said he had used professional advisors for direct shares and a few managed funds to build up his retirement, or his family's retirement portfolio. And they told us to just ride it out. So by mid 2008, our portfolio had lost 40%. Our retirement plans were in ruins. We were in total despair, and it looked like I would have to go back to work and get a job after retiring. Now, it might not be as dramatic a drop like Rob had, but Carol describes another typical result when you start paying people to make your decisions. She let us know that she hired an advisor in 2013 to help manage her inheritance after her father had passed away. She said, by early 2017, I finally had the time to take an in-depth look at what that broker was doing that she had hired, and she was shocked. It was a mishmash of cookie-cutter funds, she said. After their fees, the net result was 1% annual return during a time when the market was doing much better. Okay, that's unacceptable. Okay, there's also spending less, right? That's what a lot of people do who don't feel ready for retirement. Okay, when that happens, you end up tightening the wallet and spending less. If you're cutting back on your spending because you're worried, that's another sign your portfolio is not ready for retirement. And then finally, if you decided to work longer than you originally intended, right, it typically means your portfolio is not ready for retirement. Again, I understand there is a big difference between wanting to work, enjoying what you do, or finding something you enjoy to do. But if you do it because you have to, then that's how we know we're not ready for retirement. So if you notice, there was a theme, right? If you're exhibiting the signs that I just went over, it's a clear indication that you are here in the right place and that you need to take control. Remember, there are hundreds of thousands of people out there just like Rob and Carol who trusted their money to people who they thought were more knowledgeable, more skillful, who ended up losing 40 or 50% of their retirement savings and not come close to achieving any type of the gains they expected. Okay, so even if you have a financial advisor managing some of your money, you still need to pay attention. Right? These strategies will give you the techniques to both manage your own money as well as give you the information that you need to watch over the work done for you if you do have a money manager. So even if you're building and managing just a portion of your net worth here, you'll at least have the ideas and the ability to question the people you're paying to make your decisions. So as we go through these strategies, I want you to see how they are the things that you can do. Okay, and you don't need hours a week to do it. So let's do that now. So again, now that you've decided to take control because you're here, the first thing you need to do, okay, the first thing I'm going to talk about is preservation of capital, preserving your net worth. In other words, protect your assets. So instead of worrying about the next market collapse, wiping away your nest egg, you need, right, to protect yourself, to protect your assets. And what we refer to as a strategic defense system. Okay, you guys remember Star Wars, I'm sure, back in the 80s? A strategic defense system. A lot of people get caught by surprise when the market drops. And then after it happens, you hear the people on TV and advisors talk about, well, what should you do now to try to make your money back? What good is that? Right? What good is that? So instead, you need to know when the market is overbought, when it's toppy, when there's a reason to be nervous or to worry. And you need to know what to do to insure yourself. You insure your car, your home, your health, your life. I always joke, my wife and I, we have insurance on our dogs. We have 2 dogs I got insurance policies on. Okay, so you need to do the same with your net worth. So what I want to do is kind of set the stage here. Here's a look at the market, and this goes all the way back to 1999. So let me know in the chat box if you ever bought or owned a really good stock and watched it drop when the market dropped, right? And not just any quick stock that you might have heard somebody talking about. I'm talking about a good quality company, a stock that you say, wow, there's a company that makes money, and then you're left scratching your head as you watch it drop. Has anyone in the room ever done that? Now, I already know the answer because it's happened to me more times than I care to admit to. All right, Steve, Michael, David. Steve says, unfortunately. Michael says, yes, me. Recently, David said. Ant said, yep. Yeah, we've all been there. I'm not going to kid you and say that I haven't and still don't find myself there now and then. So what I want to do to help avoid that, of course, is to zoom in on a few of the biggest market moves that have crushed a lot of people in the past and learn from that as we move forward. That's the whole idea of what I want to do right now. So I'm going to zoom in here, and I'm going to also guess there are people in the room here today who had held stocks or managed funds through the bursting of the dot-com bubble. Right, we remember the dot-com bubble. Well, we had a customer, Lynn, and he told us that during the dot-com boom that he had taken 80 grand and increased it 5 or 6 times over. Right? But in 2000, he proceeded to lose almost everything over the next 2 years. And, you can read his words. He was not happy. And he needed someone to blame. Well, that happens way too much. You make money during the uptrend, and if you don't know how to protect it, you give it all back, and then you spend literally years, in this case, trying to recover those losses. Okay. The great hedge fund manager Ray Dalio. I'm going to assume most of you are familiar with Ray Dalio. I paraphrase a little bit. A great quote that I read in his book, and he said, you can't make money in the market without taking some risk, and you certainly cannot keep your money if you don't know how to protect it. Right. So what good is all of this if you don't know how to protect it when this happens? Okay. So that's what we're focusing on. If we move up to 2008 during the housing bubble bursts, very similar thing. The average mutual fund in 2008, late 2007, 2008, dropped over 40%. 40%. Okay. Look how long it took, and the market still didn't even get there. It took 3 years, and we still weren't back to the level in 2007. That's called time use of money that you lose out on. A lot of people like Robert here, who we talked about earlier, he lost 40% of his retirement, thought he'd have to go back to work after retiring. And then we'll zoom into just last year. We all know what happened in February of last year. The S&P dropped 34% February to March. Now this was a much quicker, obviously, move to the downside, but there was no need to suffer that catastrophe there. Let me ask you guys, how many of you had your financial advisor, if you have a money manager, financial advisor, call you leading up to any of these events to warn you? I doubt it. Okay. I'm doubting there were many phone calls to you over that period telling you what to do or to get out of the market or protect using other strategic defenses. But after the event passes, it's funny because you might have gotten a call saying, "Oh, by the way, you just lost 30%. Sorry. Again, how do we get it back?" Okay, so that's not that, this is what we need to avoid, which brings us to today. Right? Many are worried about the next market collapse. The last 2 days in the market, are they're scary when you start to see, inflation at a big move to the upside today. There's the market has been doing well, but there's an old quote. I usually have a slide. I don't have the slide, but Mark Twain, a fellow Connecticut Yankee, once said that don't just sit there and worry. Right? Do something, anything about what's worrying you so that you can take over control, have information, and focus over the situation. He went on to say that he had suffered many great catastrophes in life, but most of them had never happened, right? Because he just sat there and worried too much about things. Right? So you can be proactive. You must be proactive. Now, some people say you can't time the market, right? And the people who say that can't because they don't know how to, or they don't know what the meaning of that is. Right? We talk about timing the market all the time. The truth is, you can't predict the market. And we don't pretend to do that here at VectorVest. We don't pretend to predict where the market's going to go. We recognize short, intermediate, long-term trends, and we raise the probability for you to be on the right side of the market. So we can analyze what's going on, and again, raise the probabilities of being on the right side of it. So even though the markets, on a daily basis have ups and downs, if you look at the big picture, there's always an overall trend. And you can even see, smaller trends within a longer term trend. Okay. Surprisingly, you don't hear this information from talking heads on TV. They rarely will say, hey, rarely, once in a while you hear somebody's, but say, hey, it's time to get out. The market's in a big downtrend. You need to be careful. It doesn't happen often. So the takeaway here is be careful where you get your information, right? It's good for their business when people are investing in the market. Advisors still get their fees when the market goes up or down. They don't care. So you need to be careful where you get your information. So let's look how to use the right information so you'll never be on the wrong side of the market for more than, a week or two. Listen, we don't pinpoint every move right to the penny, right? But where you're about to see will ensure that your portfolio never collapses again. Right? So you want to make sure you have a system that allows you to determine the market's direction. Some people use things like moving averages on the S&P. There's a lot of different technical studies. I use the guidance from VectorVest. Whatever you do, right, I suggest you don't listen again to the talking heads on TV. Instead, you should have a system which is not emotional. We're all emotional. We're all human. I throw things around in my office every now and then. I've knocked a monitor over now and then. Okay, but you can't have a system built on that. It must be built on empirical data and have an historical track record. So let's take a look at a few of the major market moves that we talked about earlier. These were all game changers. If you're in the market and you have money in the market, these are the most what's the word I want to use? The most illustrative ones for us. So I've chosen obviously these three moves in the market. Let's take a close look. Let's start by looking back at the bursting of the dot-com bubble. We'll use that first as an example. But again, we've been doing this a long time. Now, every night we provide guidance such as this. Okay, back on March 17th of 2000, about a week off the peak of the dot-com, move to the upside, that bubble there, we said in our strategy section on March 17th of 2000, I believe that the rally is exhausted. Downside risk outweighs upside potential. This is the guidance we gave right here. A prudent investor should protect profits and take defensive actions, such as buying puts, that I'll talk about in a minute. Consider any rallies as opportunities to sell stocks at higher price. That's the kind of guidance we give. If you were investing back then, would that have been beneficial to you? Would that have helped? I think it would. I think it would have. Okay. If we fast forward to the next big collapse, I don't have time to go through every one. There's a bunch of these I can go through, but the next big one was November 2nd, 2007. Again, just days off the market top. We said a word to new subscribers. The confirmed down signal that we received yesterday could be the entree to a long bear market. We aren't there yet because earnings are still rising according to our method of analysis. Yet we no longer appear to have the support of an accommodative Fed. Right? Is that something we should keep in mind as the days and weeks pass coming up? Right? Inflation continues to rise. We may lose that accommodative Fed. You need to be prepared for that, right? Because that can make things very bad for the stock market. Right? This is 2007. Dr. DeLito wrote this. So don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. Would that guidance have been helpful for you if you were invested in 2007? I know the answer to that one too. Let's move to the most recent big drop. There have been one or two drops since, but the big one we all know about, the pandemic sell-off just last year. On February 14th, 2020, okay, just days before the peak, we noticed warning signals in our market timing indicators. Now, we weren't predicting what the exact headlines were going to be and saying that, this market is going to tank here, but our indicators let us know what was going on. Even though the composite was closing at a new high, we used our proprietary indicators, buy-sell ratio, RT, MTI, and we noticed that they were not closing at the higher levels. It's a bearish divergence. And what did it say? It suggested that downside risk outweighed upside potential. When we use those words very specifically, that's when it's time to be strategically defensive. Okay, this is the kind of guidance that we're looking at. A week later, we said that prudent investors should not buy stocks, and aggressive investors and traders should play the market with a bias to the downside. This time I'm going to ask you to type in, would that type of guidance over a period of time, do you believe that would be helpful to you? Just type in yes or no. Just got to make sure you guys, I know what your answer is, but I just want you guys to stay with me. Dave, Salvatore, Rick, Brian, Michael, Jeff. Yeah, absolutely. Yes, across the board there. You bet, Russell says. Okay, now that you know what to look for, okay, now we know what to look for, right? Now we need to know what to do or how to react to that. So let's take a quick case study on portfolio insurance. Now, I don't have the time to go through an entire lesson on exactly put options and how to do it. But to me, it is essential. If you're here because you're building and managing your money, your net worth, okay, it is essential, in my opinion, that you know how to protect and insure your portfolio, and not just with stop orders. Okay, they're important. They play a part. But I want to talk about portfolio insurance. Now, I'm going to use a different sell-off in the market that I didn't emphasize before. This was October, right? October of 2018. there was another big market drop towards the end of that year. I know, to me, this was a big one. I remember this like it was yesterday. A lot of people in this day and age, 2018 seems like an eternity ago, I know. But that was a significant drop in the market. You may remember it because it bottomed out on Christmas Eve, right? Christmas Eve, we bottomed out right there. So let's zoom in on this period right here, and we'll talk about the power of protecting your portfolio. Now, I'll zoom in the same time frame. I just zoomed in a little closer is all I did. Near the beginning of October, the VectorVest program recognized the confirmed down signal on October 4th. Confirmed down is our more prudent, well, it's our more conservative look, I guess, the longer term trend of the market, right? Kind of our last line in the sand. We have some shorter term indicators that tell us the market in the short term is starting to trend down. We have intermediate indicators that tell us that, and then we have the confirmed down. So this would be the final line in the sand where you'd say, okay, I have to be strategically defensive now. Okay, so October 4th. So I'm gonna base this theoretical scenario. Well, not even theoretical because I bought puts. I advised, tried to help people to push them to buy put options. Okay. So as a retiree, this is a great indication to become defensive and initiate portfolio insurance. So to do that, we would just buy put options. What's a put option? When you buy a put option, it gives you the right to sell a stock or an ETF at a certain price by a certain date. Right? So it is by definition a bearish trade. In this case, it's an insurance policy for the overall market to protect the equities you own in your portfolio. Okay. The value of a put option rises when the value of the underlying ETF or stock falls. So let's go back to the insurance policy. You have an asset. That asset is damaged. Your insurance policy offsets the damage. Okay, that's what a put option is. It gives you the right to put a stock to someone else is the technical jargon, I guess you'd call it. So we use the SPY. Why? Because we're buying good quality stocks, as we'll talk about in a minute. And the SPY, of course, covers the S&P 500, and that's why I use the SPY as an overall insurance policy. So when the S&P 500 falls, our put increases in value, offsetting much of the losses in our portfolio. That's how it works. In this case, without going too deep into the numbers and exactly how to do this right now, you would go out, you'd buy, in this case, 3 put options, right? With the SPY trading just over $300, right? That would give you the right to sell 300 shares of SPY at over $300. Okay, that's what's that? What would that come to if it went to zero theoretically? That is theoretical. About 90 grand, 100 grand. So you could protect a $100,000 portfolio by buying 3 or 4 or 5, somewhere in that range. It's not like you got to go out and buy 20 of these things. So you'd buy some put options. Okay, why? Because the indicators are telling us it's time to worry, right? And we don't want to just sit there and worry. We want to be proactive. That's what we're doing here. So buying those costs $604 per contract. Each contract consists of the right to sell 100 shares. So that's $6.04 per share for 3 contracts, which comes to $1,812 is the insurance policy you're paying for an at-the-money put to protect an asset of, again, theoretically, a $100,000 portfolio. Could be 500,000, could be 2 million, could be 50,000, doesn't matter. It's all relative. So what happens? At expiration, right, because the market went down dramatically, at any point, the value of those put options rose in price and you were offsetting the fall in the SPY. So in this case, just again as illustration, had you held it all the way to expiration, that would be just under 12 grand, right? Or 12% of the entire portfolio that you protected. with just 3 contracts. Okay, so that's how we protect a portfolio. Elaine here, he was one of our customers. This was back actually in January of 18, which saw a shorter term, but another big drawdown in the market. And we were talking about it then. And Elaine said, and he was kind enough to say, Jim, because of your teaching, I hedged my portfolio at the end of January. He bought put options on the SPY. This saved a section of my portfolio. He invested less than $1,000, and that dramatic drawdown got him over $23,000. Okay, not only saved his portfolio but brought it positive. Okay, Scott, and during the presentation, I just don't usually stop. I try to read through. John helps in the questions, but I'm going to address this one. Scott said, I notice you never say it's time to sell. And Scott, if that's what you're taking away, you're missing a big point here. In fact, I'm saying it's time to become defensive. I said stop orders and money risk management techniques are very important in our retirement investment plans. Okay. Um, and there is a time to sell your stocks where you would get out of the market. But I can tell you from my experience and from customers and subscribers and students like Elaine that there are times where you may want to hold a stock. Okay, this is where insurance, and it relates to the topic, so that's why I'm taking the time. So you can do this on individual stocks as well, right? If you owned Apple for 20 years, you may not want to sell it just because we have a confirmed down call in the overall market. But you can buy put options on it to insure it when it does have, because even stocks, even Apple can go down and have a sustained downtrend if the overall market's going down. So while I'm not, I haven't gotten to the investment plan yet to say when to sell, I'm taking it a step further and something that you should consider, and that is being able to buy insurance and protect your portfolio that way. And I use the SPY because it's more relatable to the overall type of stocks that we build our portfolios with. Can you use the Qs? IWM for the Russell if you got some smaller cap stocks. DIA, the diamonds, does the Dow. If it's a major index, you certainly can. Okay, and we do them at the money, by the way. Okay, so how much how much would that example that I showed you, how much would that have benefited you during the prior market collapse? Right. That quick example was if you held to expiration was 12 grand. Do you think that would help you? Even September of this year, I bought put options in our retirement coaching group portfolios and was able to mitigate the losses there. Even September these days seems like forever ago, right? Remember, market struggled a bit in September of this year. Right? Do you think having an insurance policy on an asset that was damaged is helpful to protecting and preserving your net worth? Rick says greatly. Right. Okay, yeah, here they come. Yeah, I just want to take a second to make sure. Mark says absolutely. Yeah, and Michael says I think the next few months coming may need that type of insurance, and it may be. I don't know. Again, the last couple of days have been rough. Inflation is up. This is a perfect time to understand how you can do this, right? It's to insure yourself here. Okay, let's keep moving. So the next strategic shift is that you need to go from worrying about what could happen and being unprepared when it does to where you have again a strategic defense system in place which protects your hard-earned assets. Protection is an important part of your entire retirement investing model. Okay, and it's how you'll be able to build wealth, transform your legacy, and live financially free, like I talked about earlier. You can make all the money you want. I'll paraphrase Ray Dalio again a little more bluntly. You can have the run that we've had recently. It's worthless if you don't know how to protect it when the market moves against you. I don't know I don't know why, but it's a long day and I'm going into cop mode here. I I want to convey to you the importance. To me, it is the most important P of the three P's. I'm sure John is in the background laughing at me right now. Okay, let's move on to the next one. I'll take a deep breath. The second P in our retirement investing model is profit. Okay, now that you have this strategic defense system in place to protect your assets, right? You don't have to be real conservative and worry about every investment that you make, right? Now, I'm it's not saying I want you to go out and be speculative and buy penny stocks or anything like that, right? But you don't have to be so afraid to invest in anything because you understand a little more about the strategic defense. So instead, you'll be able to take full advantage of the market upturns to grow your portfolio. Right? In the past, you might have been, as I showed earlier, spinning your wheels, buying stocks that didn't go anywhere or were too volatile, causing you to spin your wheels. Now, to fix that, it's pretty straightforward. We want to buy safe stocks that are rising in price in a rising market. That's right. It's one of our key mantras here at VectorVest. Buy safe, undervalued stocks that are rising in price in a rising market. So for our retirement account, we want to look primarily at a stock safety more so than anything else. That's what we're concerned here with, safety. So I'll use a baseball analogy as I am wont to do. While it's fun to hit a home run, for any baseball fans out there, especially these days, what does a home run hitter do when they don't hit a home run? Right? When they don't hit a home run, what do they do? I know you guys know, right? Yes, that's it. They strike out, especially nowadays. We don't want to strike out. We can't afford to strike out in our retirement portfolio. What happens when you do that is you start to invest like someone you're not, or you invest, directly against what your main objectives are. Okay, you start to invest against the idea of the three P's here, and that's not good for your portfolio. Right? And if you're not seeing the returns you want, the answer, by the way, is not to go faster. Right? Don't try to become a day trader or a short-term trader to make your money back quickly in your retirement account. Now, you may have money allocated to shorter-term trade. That's all wonderful. Lord knows I've got a very speculative account that I joke that my wife doesn't know about. But, in your retirement account, you have to be much more prudent. And the idea here is the answer is not to go faster, right? I have two boys. They're a bit older now, but when I was teaching them how to drive, if they were struggling, I didn't tell them, hey, if you're uncomfortable or you're not really sure, just slam the gas pedal down, right? Slam on the gas and go. No, that's not what we do. Right? So we do the same thing when it's investing. We don't try to quickly make up for any losses. So a lot of it starts with a quote from our founder and mentor, Dr. Bart DeLito. Dr. DeLito said many times a long time ago, good portfolio management starts with buying the right stocks. And I used to put the 69 Mets. You could put, if you're a hockey fan, the 96 Rangers. I mean, there's so many, or 94. Was it 94? 94 Rangers. Any team you want. You pick at the team. It's like it's like being the GM of a sports team, right? You put the best players on the field or on the court or on the ice, whatever it is. That gives you the best chance of winning. Same thing when you build your portfolio. You put in the very best stocks that you can to increase your odds of winning. Okay. So let me share a checklist of what we look at when determining the safety of a company. Okay. This is our stock safety checklist. This is just some of the things, and not even all of them, but some of the things we consider. There's earnings consistency. Does the company make money quarter over quarter, year over year? Does it meet or exceed its earnings estimates? We take into account the company's size, understanding that just because a company is large doesn't necessarily mean it's safe, but it is something we look at. Price volatility, right? This is not really about, implied historical volatility, that type of volatility. It's just, does a stock, does it have those violent drawdowns or long stretches where it's going down in price? That's kind of more what we're talking about for price volatility. Things like debt to equity ratio. When we look at a balance sheet, it's very important. A favorable debt to equity ratio means that a company, whether it's the economy itself or something specific to the company, if they've got a good balance sheet, much more likely they'll weather the storm. So that's what we look at. Business longevity. Dr. DeLito says about that, the better the devil you know than the devil you don't. So the longer the company's been around, we take that into account. And then dividend history. A good quality stock doesn't have to pay a dividend. Okay, a good safe stock, but if it does, right, it better darn well continue to pay it and grow that dividend. These are just some of the things that go into what I want to talk about now, and that is what we call relative safety in our program. So I want to start by looking at a list of about, I don't know, about 40. I think there's 40 stocks in the watch list I created. I put the list together. It's made up of places where you shop, where you eat, what you drink, where you spend your money. Let me go into my program here and bring that up for us. So this is my VectorVest program. I'm going to go ahead and click on the Viewers tab along the main toolbar here. And when I do that, it brings me to a watch list that I've created. And like I said, I've got 40 stocks on the watch list where places you're familiar with, right? Sunday afternoons, you enjoy a cold beer, right? Take the kids to Disney. You go to Walmart, you use your cell phone, you're flying somewhere, right? This is the idea of the list of stocks. You own a home. I know you go to Lowe's or Home Depot. Okay, Kohl's and Target. Yeah, you get the gist here. Okay, so these stocks are in place here, and it's fair to say again that you're familiar with these companies, right? Now that our list is created, I mentioned earlier, leveraging off others, and this is leveraging off the power of VectorVest. Now these stocks are not just listed in order here randomly. They are immediately sorted so that the stocks with the best value, or the best combination, I should say, of value, safety, and timing come to the top. These are our proprietary indicators. Capital price appreciation potential is relative value, relative safety, and relative timing. Right? We have a formula. We take these proprietary indicators, and on a 0 to 2 scale, we rank these stocks with a VST. Right? I like to say we take the formula is that we take the average weighted sum of the squares. We take relative value, safety, and timing. It's the average weighted sum of the squares. I have no idea what that means, by the way, but I love saying it. And that gives us the value, safety, timing indicators. So that's how these are sorted as of today's, as we speak. Right? That's where we're at. Okay. Now, so no matter what day you look at this list, the best stocks will come to the top. However, as a retiree, we can be even safer than this, right? Not all the relative safety number on a 0 to 2 scale. All I have to do is come here and click on relative safety, right? And I can sort this list of 40 stocks by RS and bring the highest ranked, safest stocks to the top of the list. So, of course, we're not going to go out and buy 40 of these stocks. Again, this is just stocks I put together, but we're not going to buy 40 companies. But let's see what happens if I go ahead and take the top 10 sorted by relative safety and I run what's called a quick test. When I click on that button, I'm going to change our calendar back, and I can quick test these stocks and go back all the way to January 2nd of 2019. It's the date that I chose. Why? Because it's long enough that it's put us through some sell-offs, some really good moves in the market. Gives us a good indication. You can change it to whatever you want if you have VectorVest. I didn't set it. I use, for the sake of illustration here, I'm using a 2-year look at this. Okay, so I'm going to click OK. Now I hit Run Test, and this is how these top 10 stocks performed. Okay. Let me run that. Is that right? I did something wrong here. The top RS stocks from 1/2 of 19, right, to now, and we can see how these stocks have performed versus the S&P 500. Okay. Now, I think that name is wrong. Let me do this one more time. I'm sorry. I think I have the wrong date on there. That number is higher than it should be. That's what it is. I'm sorry. I apologize. I had hit the wrong button to set that date. So here's how these top 10 stocks from our list of 40 performed versus the S&P 500 since January 2nd of 2019. Okay, I didn't click the right button earlier, which is good, right? Now this is no money management. This is from point A to point B without any risk management techniques whatsoever. Right, so it basically performed with there. So to illustrate the power of relative safety, what I'd like to do now is click on the relative safety header once again, and now I've taken these 40 stocks and sorted them with the worst relative safety from bottom to top. And now I hit quick test and we run it again and look what happens, right? Now we're up only 45% versus 85% on the S&P 500. So all well-known large companies that we're all familiar with, we take the lowest relative safety and we do less than about half of the returns as the top RS stocks. That's an amazing illustration of the power of relative safety, in my opinion. Now, what I could do real quick too is I'm going to go to the, if I'm in the viewers, I'm going to go to the stock viewer page real quick here, and from I'll go back. I'm going to change the date once again to the same time, and we'll do January. Again, you can do this with any date you choose. This is what the watch list looked like, those same stocks. I'm sorry, not the watch list. The stock viewer page looked like on January 2nd. This is, back then we were tracking 6,800 stocks at the time, sorted by relative safety. So why limit ourselves to just 40 stocks is my point here. Now I got a list of 6,800 stocks. If I want to build a 10 stock portfolio, I can hit relative safety, and now let's run that quick test, right? And you can see, again, with no money management whatsoever, that we now significantly outperform the S&P 500 just choosing the top 10 and buying and holding. That doesn't include any type of money management techniques. Right. So let me get back to our slides here, and then just what I want to talk about. Actually, I want to go back into the program real quick. What I wanted to show, if I graphed just these top 5 stocks here, I want to illustrate to you, what we look for here. Okay. Actually, I'm going to do it from the stream today. So if you were to go today to take the top stocks in the database sorted by relative safety, okay, which is where we are now. We're right back here. I want to take the top 5. So if you were going to initiate this idea now, this is what the stocks look like on a graph. I'll take some of this mess off here. And down below is earnings per share, right? This is our forecasted, it's a mix of historical and forecasted earnings. So that nice northeasterly movement of both price and earnings is not coincidental. And you can see what these graphs look like that are on top here. Right? Facebook was on there, a little choppy on Facebook recently, but you can see the type of stocks. These are the type of stocks we want in our portfolio. And when we do, this is the type of results. Again, back from 2017, this slide I showed earlier. It's up over 214% in less than 5 years. Okay. So we talked about earlier proving it, and I like to show that those results are. If you could double your money every 3 years, right, buying safe stocks, how would that affect your retirement? To go from $100,000 portfolio to 300,000, actually, it's more than doubling. Right, that portfolio in just under, well, in this case, just under 5 years, went from $100,000 to $314,000 value. It's gonna help you in your retirement stages, right? Yes, there they go. Starting to come in. So it's another shift you need to make. It's to go from slow and stagnant growth to where you have a solid growth portfolio strategy that has you buying good, safe stocks at the right time so you can steadily grow your portfolio. Okay, that's another important part of your retirement investing model. that we talk about. Finally, I'm going to talk a little bit about generating income. Okay, this is the third P in our retirement investing model. Remember, you don't want to rely on your pension or Social Security to carry you through retirement. So, in order to continue living the lifestyle that you choose, you need to open up new income streams. There are two main ways that you can do that. Two main ways. Number one is to get paid building a good quality dividend growth portfolio. Okay. One of the benefits in focusing on good quality dividend stocks is that they typically pay a nice dividend to shareholders. We want to capitalize on that, and they're more mature, good, strong free cash flow with a long history of not only paying but growing their dividends. But finding the best dividend paying companies for a lot of people isn't the easiest thing to do. And one example of that is if you go into Google and you Google good dividend stocks, you'll get a lot of results, but you have to be careful because most of these things will show you simply the highest yield. Right? They'll show you the highest dividend yield, and that's okay. It's good to know what the yield is, but are they good stocks? Are they safe stocks or ETFs? Right? We have no clue to that when we look at just the yield. Right? Nasdaq.com has a similar one. It's just the one here. You can see that right, everything's sorted by the current dividend. You have 32.85% yield. Right? And yeah, I don't know if that's worth my money or not. I have no idea just by going by the dividend yield. So instead, in the VectorVest software, there are several lists that are built for you already or that you can create through some other tools. But for example, here you see a list of companies that have not only paid but increased their dividends each year for 25 years or more. Right? The DRIP means that stands for dividend reinvestment plans. So you can automatically reinvest your dividends from here, right? Which gives you the power of compounding. Right. We have others 10 to 24, 5 to 9, some others there, but this screenshot was taken back in August. But these are the type of stocks. West Pharmaceuticals at this point had the highest value safety timing indicator right at the top of the list. And I think coincidentally, I think it was the highest RS stock as well. Okay, so again, these aren't randomly placed here; they're sorted in this way. So looking at West Pharmaceutical, I have a graph here. Now this is not a 3-year, 5-year, 1-year graph. This goes all the way back to 1995, right? 1995, and it shows again the power of that movement of that stock to the upside. And then this is not earnings. This is the dividend payout. So these are the type of stocks. This is what they look like. The type of stock. T. Rowe Price is another one. There's a bunch of them on that list. Right, T. Rowe Price, West Pharmaceuticals I own, Nucor is a great one. Target is what they call a dividend to risk ratio. Sherwin-Williams has grown its dividend, I think, for 80 or 90 years or more. Right, Aflac is on there. Some stocks maybe you never heard of. Brown and Brown is another great one. Okay, so there are some great stocks that look like that you can build your dividend portfolio, and when you do, as I showed this slide earlier. Right, this is just capital appreciation. Now, this is a longer term than the ruler stocks, right? To convey the idea that when you're talking about generating income via dividends, that it is, a longer term process. And remember, I already talked about how to mitigate these drawdowns. This is the February drawdown. So this doesn't account for the insurance policies that we put on these portfolios as well. Part two of generating income. Okay, part two of generating income is another option trade. Collect rent from your stocks, right? In other words, we sell covered calls to generate income on stocks we already own, or we can go out and buy a stock and simultaneously sell a call against it. Selling covered calls is one of the safest, most popular option income trades there is. It is the safest. Well, let me take that back. It is certainly the most popular, and it is safe when the process is correct. It's a very safe trade, and it is the most popular options income trade. Okay, again, you don't need to be an options expert to do this trade, but selling covered calls is an excellent way to generate some income. Let me show you a real quick example of this. Stocks at 176 here. Okay, doesn't matter what stock or when it was. It's just a theoretical example here. I own the stock. It's trading at 176. Okay. Either that or you go out and you buy it simultaneously. What is selling a covered call? Well, again, without going into an entire options talk here, just know that someone will pay you money today for the right to buy your 100 shares from you at a specific price, at a higher price, I should say, on a specific date in the future, right? So what is a call option? The buyer of a call option has the right to buy a stock, ABC stock, at a certain price by a certain date. The seller of the call option has an obligation, right, if he enters into the contract, to sell the stock. But again, this comes from a gentleman named Lee Lowell. He worked in the option trading floor, and he wrote a book called Get Rich with Options. And I just thought it was the greatest, most logical definition of what a covered call is. Someone will pay you today to take your stock away at a higher price. I own the stock at 176. Someone is willing to pay me $10.33 per share for the right to take away my ABC stock here at $180. That's right now trading at 176. So I can get $4 of capital appreciation plus the $10.33. That's an amazing thing. It's an amazing way to generate income. So what could happen? Well, the stock could go down, which could happen anyway if you own a stock. There's no added risk by selling a covered call. Profits from the call you sold give you cushion. Actually lowers your cost basis. It's like a built-in stop order almost. Right? If the stock goes down dramatically, without risk management technique, you will lose money, but you do have a cushion that's built in. In this case, for $10.33, our cushion is all the way down at about 166.5. Stock could go all the way to 166.5, and we don't lose any money. That's the beauty of a covered call. One of the beautiful things about it. Now, what if the stock goes sideways? You get to keep the $1,000 in this case, plus you can sell another covered call and continue to generate income. And then finally, if the stock takes off, it's great. You make the max profit. They take your stock away, but you get to keep the 1,000 plus the $4, and you go out and you do it again. When your objective is to generate income, this is the best case scenario. Call away, go up, go higher, take my stock away. Means I made money. Okay. Now, in fact, you remember Jerry from earlier, I talked about him prior to learning this income strategy. He told us his investing, as I said earlier, was hit or miss, and he had no methodology in place. After learning the covered call income strategy that we teach, he's now generating more than 2% per month. So again, I'll ask you guys, how many extra income taps do you have open now? And if you don't, and you had them, what would that extra income allow you to do? What would it allow you to do? Yeah, Dave says he has one so far. I'm going to guess dividends, Dave, or maybe something else. And that's great. You don't need to implement them all. It's just it's good to know what's out there. Listen, again, selling covered calls to me is an essential trade. It is for your retirement, in my opinion. Right? In my experience, right? Not just my opinion, but what I've seen, and for a lot of years I've been doing this. Right. Russell says you leave money on the table if you don't do this. Charge your stocks rent. It's a great way to generate a safe, steady income. Okay. So that's our provide portion. So again, the strategic shift here is when you implement the provide piece to your retirement investing model, you'll be able to shift from not having enough income to where you have a steady flow of consistent income, which will allow you to continue living the lifestyle that you're used to and that you deserve. Okay. Dr. DeLito told me a long time ago in a conversation, I'll never forget it. I was talking to him about, my conversations with customers when we used to go on the road on our seminars and stuff, or other contacts I have. I said, Dr. D, the question comes back in some form or fashion all the time. Basically what I'm afraid of and what I want to be able to do or don't want to happen to me is to run out of money in retirement. So how do I keep from running out of money in retirement? And Dr. D used to say to me, and the way he could say it, he said, James, just tell him to keep making more money and show him how. That's what I tried to do here today, is to show you how you can continue to make more money, and that's a big part of the provide portion of the 3Ps. So you showed up here today for a few reasons, I think. Thank you, first of all, for showing up, because as I said earlier, you may be worried about the next market collapse, right? And what to do. You want to be prepared. Perhaps you're here because you want to grow your account because it feels like you're spinning your wheels right now without the proper plan. Maybe you don't have enough income to replace the paycheck that you were getting, or are planning on retiring and won't have that paycheck. So you're looking for that income. And hopefully you don't fear you'll have to scale back your lifestyle or depend on others. I hope that's not why you're here. But hey, maybe you're doing okay right now, but you're just still not quite where you want to be. And you still don't quite have that plan to get there. Well, today I hope that you learned that it is possible to take control of your retirement when you have a clear plan and objective in place, that you don't need to be worried about a market collapse when you understand and know how to implement a strategic defense system, and that you can steadily grow your portfolio by using a solid growth strategy, specifically the high relative safety stocks. Okay. And then finally, how you can generate that safe, steady flow of income, whether it's dividends and covered calls, just dividends, either way. Now, the main thing I hope that you took away from today is that the secret to building your wealth and preserving your wealth is to have that retirement you want, is to build wealth, transform your legacy, and live financially free, as I started our presentation off with. Right? The goal to do that, to be able to do that, is to make sure your retirement investing model includes the 3Ps. So that brings us to the obvious question that you may be asking yourself right now, and that is, how do I create this type of system in my retirement portfolio? How do I do that now? Well, I believe you have a choice. Well, I know that you do. You can choose to do absolutely nothing, okay, and keep doing exactly what you're doing right now, but the same thing will keep you getting the same results. And what we fear here is that you'll be in the exact same place this time next year, worrying if you'll have enough money when you retire, and the year after that, and the year after that. Right? You can choose to do it alone, maybe put together some of the things you learned here today and do a little more research and learn by trial and error. But mistakes, as we know, can be very costly in this business. Or you can just choose to do what I did, what Jerry did, what thousands of others have done, and that is get right to the solution. Right? Why do all the work on your own when there's a training available that allows you to bypass all that trial and error, right? So that you can get to success much faster. Right? That way you get your retirement on solid footing as quickly as possible. So I want to give you the plan that if you and I were to work together for 5 weeks, literally you and me in a room every week for the next 5 weeks, here's what I would get you to do. Right? Here's what I would get you to do. And it all falls under a step-by-step roadmap to a secure retirement called the Retirement Portfolio Transformation. Okay, Albert Einstein once said, everything should be made simple as possible, but not simpler. Okay, this quote is attributed to him. I'm going to assume he said it, but it makes sense. It's smart enough that it was probably him. So before we get to that, I need to point something out. Okay, that this is not, right, it's simple to do, okay, but it's important you understand it's not a get-rich-quick scheme. It's not some magic pill where you should expect results, in the next 24 hours or 24 days. It's serious, requires some effort on your part to do this. So, if you're not going to commit any, the time or effort, because I'm here to be honest with you, then don't do it, because it's not for you. Right? It doesn't take 40 hours a week, it doesn't take 10 hours a week, but it does take some effort. It's for serious people who take their retirement seriously and are willing to put time and effort to learn the system. But this is why VectorVest was created, right? It's why we're here, why we have put together this portfolio transformation for you. We put it together for serious people who want a simple plan to set up their retirement portfolio for success. Right? The system works, but you got to do the work. There's no magic pill. Okay, you need a plan, and if you're willing to do the plan, then you'll get results every single time. So by transforming your portfolio, you'll be able to build that wealth I talked about for you and your family. You'll be able to transform your legacy and create a better life for you, your grandchildren, your children, and you'll have that financial freedom that I talked about. All using the retirement portfolio transformation, the step-by-step roadmap. Stay with me for a few more minutes. It's easiest to explain this course as I map it out for you and to let you know exactly what we do to get you to reach those goals that I talked about. Right? You remember, of course, we just spent an hour laying out the 3 Ps here. The course will guide you through setting up the 3 Ps in your retirement portfolio. First, we'll build a strong foundation for your retirement. This is where you'll get a clear sense of your goals and your objectives. We'll walk you through a process so that you remember exactly what your goals and your vision statement is all about. Right? Great quote. I don't know who to attribute it to, but I read it and it stuck with me for a long time. And you need to always remember this. I got to put a slide up for you to take the screenshot out. A goal without a plan is nothing but a wish. Right? It's just a wish. Right? You set goals, you don't achieve them unless you have a plan in place. Okay. So this first module anyway goes to that. It helps you treat your investing as a business. That's an acronym, the SMART goals we walk through in creating that vision statement. Next, you'll learn how to increase your capital with a safe growth portfolio. Those portfolios I showed you before have investment plans and specific risk management techniques behind them. We'll identify the right stocks, right? We'll put the best candidates on the field like I talked about earlier, and then we'll manage them properly using the VectorVest program. We'll do the exact same thing for the provide portion of the dividend growth portfolio. Again, we'll identify the characteristics of a quality dividend stock, right? And we'll talk about managing those stocks. It's a little different than managing your growth portfolio. Okay, the outcome of this module is that you'll know exactly how to identify the best candidates. You'll know when to buy them and how to manage them. Part 2 of the generating income I talked about is 2 very basic option trades. I can't convey enough the importance of these trades and how easy it is to learn them and how and when to apply them. You don't need to be an options expert by any stretch. You can sell put options or covered calls to generate income. Every retiree needs an additional source of a steady, reliable income. Banks, bonds, Social Security, whatever, won't be enough. Even if you never traded options, I will show you in modules 4 and 5 how these trades work and how to implement them. Okay, module 4 to generate income, module 5, how to eliminate the risk using put options. Essential. You're here because you want to manage and build your own portfolio. All of this is useless if you don't know how to protect it. That's not, some phrase I picked up. It's from experience, my own and watching others around me. All of this is useless if you don't know how to do this. I'll teach you. Okay. So here's the thing. If I work with you one-on-one for 5 weeks, literally just me and you together in a room doing what we're doing right now, okay, there's a price tag on that. Okay, this is the suggested retail price. This is not what you're going to pay if you choose to join me for this course. The full transformation course. You also get a bonus of 5 live mastery support sessions. So these are modules that are archived in the VectorVest University that you watch at your leisure. They're broken down into 3, some of them 4 videos, so that it's not just one long video that you have to go through. You can focus on any part of it at any time. So these are archived for you. What we then have is a bonus live mastery support session, and I'll give you the dates and times for that in a moment. Right? So what we do in the mastery session is we go back and we review and implement what we learned in the module. Okay, then we have another bonus for you. John and I conduct every Tuesday what we call the retirement coaching group. It's a members only group that meets every Tuesday at 2 p.m. It has a membership site and all. But we're also going to invite you for the next 5 weeks to access this coaching group every Tuesday. And if you can't make it, I'll show you how we archive that as well. So for any live session that you can't make, because the question will come up, any live session that you can't make, we record and archive in VectorVest University. Okay. The total price of that, if we went through it, $4,300. We're not going to charge you that, right? We have an early bird special that's good through Monday of just $595 to sign up for the course and work with me for those 5 weeks, those live mastery sessions in our coaching groups. Okay, that's an early bird special, but because you're still here, because you stayed in the room, if you order before John and I log off, and we're going to stick around and answer some questions, we're going to take that another $100 off that $595. So for just $495, okay, you're going to get the course if you order before we're done here. Okay. So if you go to vectorvest.com/transform, which is a link that John just put into the chat box. So I'm going to click on it in a minute. I just want to get through a couple of more points, and then you can click there and sign up. www.vectorvest.com/transform. Okay, $495. Now, you hear all the time, or I say all the time, there is no such thing as a risk-free trade. You hit the enter button and you're risking money. This course, right, laying this foundation for you is a risk-free trade. After the course is over, if you've shown you've done the work, come to the classes, watch the recordings, and you're still not satisfied, I will give you your money back. I'll pay you back. It's completely guaranteed. That's how much confidence we have that this will lay the foundation for your retirement portfolio transformation for years to come. Okay. You got to look through the videos. You got to take the lessons. You have to go through it. But if you're not satisfied, within 7 days of the end of the course, I will give you your money back. Risk-free trade. Now, there's a saying that the best time to plant an oak tree is 20 years ago so that you can be sitting under it enjoying the shade today. But do you know when the next best time, the second best time to plant it? Right? The second best time is today, right? So it's never too late to begin to prepare for your retirement. And then finally, you have to ask yourself, how much did it cost you back in 2000, 2008, last year, last month, well, not last month, a couple months ago, September, by not having this information? How much did it cost you on any of those downtrends in the market? If that number is more than just $495 because you weren't sure on how to place an insurance policy on your portfolio, then let's fix this once and for all. Make it so you never have to experience a 2008 again, or a 2020, or a September we just had, or what's happening now. Let's make it so that this year you begin to safely grow your retirement, generate that income, and you know how to protect it. Okay, it's $495. Go to that link, and again, I'm going to click on that in a minute, and John and I are going to answer some questions. Our friend Robert here, he talked about what happened. He realized that he couldn't rely on others. So in March of 2009, after the financial crisis, he used VectorVest's unique market timing system with its fundamental and technical analysis, stock picking techniques, went into the market on his own using the VectorVest techniques, and he recovered all of his financial crisis losses. Okay, 15 to 30 minutes a day using the program, his retirement portfolio, giving him the money and time to do things that are important to him. So again, just $495, self-paced retirement transformation series that you have access to, by the way, for 1 full year. And I'll show you what it looks like in just a moment in the VectorVest University. Okay. We'd love to see you with us and look forward to working with you. Okay. If you've gone here already, let me just pull this up. If you've gone to the link already, this is what you will see. If you've done that and signed in, type in 2 words in the chat box. Type in "I'm in." I'd love to give you a shout out and tell you what to look for next. So when you go to the VectorVest.com/transform, It's going to bring you here to purchase course now. The regular price for the course is $9.95. Enroll now in the next, John and I are going to stay here and answer any and all questions that we can for you. So uh, this price will be available to you for the next, I don't know, I'm going to say the next hour or so, give or take. That $5.95 is still good till Monday at 5. So if you just click purchase course now, it'll think about it for a minute, as you can see, and it's going to take you to just the page where, if you're already a subscriber, that all you need to do is sign in here with your VectorVest username and password, and it'll get you signed up. If you're new, if you're in the room now and you're new to VectorVest and you want to get involved, by the way, what I left out as one of the bonuses, if you're not a current subscriber, we will give you access to the VectorVest program for the next 60 days to get through the course and illustrate what we do using the program. So just put in your basic information here and choose submit, and that'll get you signed up for the course. So if there are anyone who's if you've signed in and that worked, let me know. Type in I'm in, and keep an eye out for an email. Check your spam folder too, just in case it goes there. And we'll give you all the instructions that you need. Okay. Russell had typed in, that is a bargain, and it is. Right. September, we had some red lights in the price column. I went out and bought some put options in a live VectorVest account that we use in our Tuesday coaching groups, and we made just under $2,000 in I don't know, a week or so, not even. That helped to mitigate that little bit of a sell-off we had. And then the markets rallied again. It was an insurance policy that worked perfect. We do it all the time. We have certain parameters and techniques that we use. But again, it'll certainly save you more than $495. Demetrius, I'll just real quick, I'm going to ask John to come in and check any questions that I might have missed. But Demetrius asks, I have 200,000, just under 200,000 for retirement. Social Security pension, would that be enough to retire using VectorVest? Demetrius, here's how I can answer that question for anybody else who's putting up, depending on the size of your portfolio, is that what I'll do in this course is show you how you can take that money, that nest egg, and continue to grow it and to continue to generate income, right? Like I said earlier, what Dr. D said. How do I keep from running out of money in retirement? Well, just keep making more money. I can't be clear enough. This is not a process technique that's going to double your money in 3 months. Right? It's not some magic pill, as I said earlier. I want to be honest and clear about that. But it will lay the foundation for a secure retirement and to get you the peace of mind you deserve. All right. Hey, John, if you're out there, come on in with me and help me answer some questions. I'm going to take a quick sip of water. John's going to come in, make sure I didn't miss any questions or anything. Remember, if you signed up, type in I'm in. And let me know. In the meantime, John, hop in here and help me out. And I'm going to take a quick sip of water.
I am here. First question, the usual question. When do the live sessions start and what's the schedule like?
Okay, yeah, we get that question, and then I was just looking there. Charles had an issue there. Maybe you can type in an answer for Charles there.
Yep.
Okay, yeah, I did. I created a slide here. It's kind of a busy slide because it covers 2 months here. But here's the setup. If you're considering the course, here's what we do. Once you sign up now, right, for the $495, you're going to get an email giving you instructions on how to access the program, right? What does that look like? Well, this is what it looks like in VectorVest University. Okay, you're going to have access to the retirement transformation portfolio, all of the modules, all of the mastery sessions from the last course, the bonus module, and all of the group coachings that you're invited to will be archived here for you. Okay, you also have access to all of the cheat sheets and spreadsheets that we use. okay, and all of the different resources. So that's what it looks like once you sign up. Now, that you'll get instant access or access this evening to that if you sign up tonight. The mastery session or the mastery live sessions will, because of Thanksgiving week, are going to begin on Monday, November 29th at 12 noon, and then we'll continue for the next 5 weeks after that. Okay, it's going to be every Monday at noon. If you can't make the live mastery session, we will archive those in that membership site or not, or the course site that I just showed. You will, as I said, be invited to our retirement coaching group that meets live every Tuesday at 2 p.m. Eastern Time. Okay, these are the dates for those. Okay. Now, it actually goes out to January, the first Tuesday in January, a week from this. We do have the bonus module of selling credit spreads that you'll be invited to as well. I just didn't put a third month on there. So there is one more bonus module left after this. But these are the dates, times. They're live, but they are recorded and archived. So if you can't make it, you can see it later that evening. Now, another question I usually forget to point out here or comment is, if you have questions and you can't make the live mastery session, we do have a dedicated email bin to for the retirement transformation students. So you can email us. It will go straight to that dedicated email bin. If you have questions, okay, what we do is we'll answer the questions during the mastery session, so you can get your answer there. And of course, we'll also respond to your email as well. Okay.
Excellent, Jim. Question here. Does this work for non-US based markets, Jim?
Yeah, we saw a few folks earlier on who were from Canada, some from other parts of the world, and yeah, here's the answer to that. The concept works through all the VectorVest databases, right? The proprietary indicators, how we rank and analyze stocks, how we recognize market trends, is similar across the board. And so yes, it does relate to that, or work with other platforms. The one footnote I put in is that when we talk about options, the option markets in the UK or in Canada, more so in somewhere like Canada or Australia. But in Canada there are options there, but they're not as liquid as they are on the U.S. side. So that's the one difference. Can you still do it? You can. You can still buy protected puts and sell covered calls. But just that's the one comment I make when folks ask that question. So um, it is applicable to all of our VectorVest databases, buying safe, undervalued stocks that are rising in price, and the process in which we do it. The options are a little different, but again, even those concepts can be applied. So that's how that works.
Excellent, Jim. And what about your level of option knowledge? Do they have to have prior option experience for the options portion of the course?
Yeah, no, as I said earlier, I believe these two option trades are essential. And I also believe that if you know nothing about options, you will understand exactly how and why it's important by the time modules 4 and 5 are done. Right? I will show you step by step how to do just two option trades. Okay, that's all it is. And I know everyone in here either has car insurance or life insurance or homeowners insurance. I know you all have that, so you know exactly the concept of what a protective put is. I'll show you the details on how to set one up. Like I said, if you lost more than $495 in the September sell-off or February of 2020 or any other sell-off in the market, right, this module will pay for this course many times over. Just this module alone. So the short answer, John, to the question is no. You do not have to have experience. You do not have to be an expert. I will teach you exactly how to place these two trades. It's not an options course. My goal isn't to make you an options expert. It's to get you to understand that You can charge rent to the stocks that reside in your portfolio, and you can protect them with two very easy trades. I'm just looking for any other
Excellent,
questions.
Jim. Um, what did you say?
I'm just trying to look at some questions here to see if there's any that I missed. If you see any, what else we got here?
Okay. Um, let's see here. The next question is about portfolio size. There are two questions that interest me. One was somebody who's near retirement, and I know you had discussed, I can't remember what the name was, the one with 200K, but is there a minimum portfolio size that they would want to have to get started with this course?
Now, again, it's all relative. There's no exact number I can put on it, right? If you have 50,000 or if you have 5 million, right? You're still going to want to grow and protect that, right? So the portfolio sizes are really, it's difficult for me to put a price tag on them. Look, can you buy dividend stocks and good quality high RS stocks, with a $12,000 portfolio? It would be that makes it a lot more difficult. Okay, but I have a live portfolio right now that, yeah, I'll give you a quick example. Right here's a $50,000 portfolio that we manage on Tuesdays in our retirement coaching group. It says Ally Ruler Stocks because it's a live VectorVest account using real money that begin. Now it took a little bit of a hit today. We've already hedged this portfolio several times with options. Right, this drawdown, and this just began on September 3rd on the confirmed up. It's a, it, Let me clarify this because I brought it up. So give me a second to clarify. In the VectorVest program, was $45,000 invested. There were $5,000 in cash left in the actual Ally account um, to put towards insurance policies if we needed to, just to have some cash, keep the powder dry, as they say. Right? We've already used that to gain about $1,600 or $1,700 on some hedges that we used. So the value of this portfolio in the Ally, the 50,000, is now somewhere around 54, 55,000. Here we started with 45,000. We took a little, today was a rough day in the market, right? And if the market follows through to the downside tomorrow, I will go ahead and place strategic defense measures. So if the drawdown continues, we will be insured. But that's an actual live real money example of what we do. Now, where you are as you approach retirement, or if you're in retirement, I saw that, I think it was Joe who asked the question, how far away from retirement do you need to be for this plan to be effective? Listen, I would love to someday have a room full of 24-year-olds to help them start to build it would be a different setup, of course. But if you're building your retirement portfolio now, if you're 1 year, 5 years away, if you are in retirement now and you just have your money stashed away, in a money market or some mutual fund, the money that you allocate to the equity markets, this course will help you grow and protect. Should you save some? Sure, you should. But you should allocate a good, again, depending where you are in retirement. Listen, if you're 80 years old, I might steer you away at least a little bit from things like the high RS stocks for capital appreciation. Maybe allocate a lesser amount to that and stick with a good quality dividend stocks, right? I mean, it's hard to do because there's a lot of folks in the room. It's hard to pick, the one scenario. What I will tell you is that I'm not, a certified financial planner. I had the Series 7 for a long time. I don't anymore, but I'm not a financial planner. So when it comes to allocation of money outside of the equity markets, that that that's going to be up to you, right? But I do understand life expectancy charts, and I understand how it works. That nowadays, listen, when Social Security was created, right? What was the life expectancy? Right? They used 65 years old because I think the life expectancy back then was like 67. Right? Made a lot of sense then. Right? Now it's a little bit older. Anyway, I could talk about just that for an hour and a half, but I'll stop there.
Hmm. I'm going through here. I think we answer the questions in the chat as well as verbally with you for the group, unless you see something.
Yeah, I just see Demetrius put something in there, John. He said he tried to sign up. It asked me to log into VectorVest, took me to the course, and asked me to pay there. Is that correct? That is correct, Demetrius. It should offer you the 495 price, and that's where you should
That's correct.
line up, right? So yeah, it sounds like it got you to the right spot as long as it's showing you the 495. Jason, I see asked John. I see it just came in. How many hours exactly are all the videos? I can show you. Well, again, if I didn't say it already, one of the great things about that was for the account. I want to open the. Shoot, did I close it? No, there it is. Um, to Jason's question, how many hours? So you have access to this in the universe. You just go to university.vectorvest.com, and you have access to the course. The videos are broken down. Now, each module, there's 5 modules. There is roughly 1 hour of videos for each module. But I did it differently this time. There's not just one long video for each. We broke it down. There are separate videos now, right? Module 1 talks about treating it like a business. There's a video. Then there is the 3 core strategies we walk through. There's another video. When to buy, right? And what to buy. So we break it down so that you can go back. You have access to this for a full year after the course is over, by the way. 1 full year, you can come back and review all of this. So every module has that ability to come and do this, right? We break it down to our objective, how to implement that objective, and that's how I break down each of the videos. I try to keep it as clear and straightforward as possible. Irene's asking, how long is the retirement coaching group access available? Irene, you are invited starting on the 30th of November. You're invited to 5 sessions of that. Okay, you get 5 sessions of that. And it's a good place. What we do there, like I said, is we implement all of the things we learn here. We implement those in the
Jim, is it 5 or 6?
it's
I thought it was 6.
no, this one is 5, John. I did try to research that from earlier. The question came up.
Okay.
It's 5. But you know what? Because it's the day after the bonus module, you know, listen, that's not till January. It doesn't take much for me to get an email out to invite you to that final one. So
Okay.
we can fix that. But I did look it up. Right now, it's scheduled for the 5 weeks for each module. But really, it's not a problem for me to get a link out to you guys for the 6th one.
Looks like Romeo signed up.
Oh, great. Yeah, anyone else who signed up, let me know that you're in so I can give you a shout out and welcome you. And Romeo says signed up and the module showed up in my member account. Okay, great. So it worked out perfectly. So pretty, not exactly simultaneously, but pretty quickly. You follow the instructions that come in the email and it'll get you into, again, this page that I've showed. Now you have access to that. That's why I said earlier it's kind of self-paced. You can go through these, starting now. Now our mastery sessions, because of the Thanksgiving week, don't start until the week after Thanksgiving, but we'll begin then to review all of these. Okay. Okay. But anyway, Romeo, thank you for signing up. Look forward to working with you.
I like Russell's comment over there.
Yeah, Russell's got a good comment. Russell said this is the perfect VectorVest course to get started and then move on to more advanced. And yes, Russell, if you're looking for more, especially, listen, a lot of folks are new to options. If you're looking for ways to generate income with options, the bonus module that comes after these is great. Our colleague, Mr. Ron Wheeler, will come in and expand on the ability to use options, right? There's nothing more flexible and more versatile than option trading. I'm not here to teach. It's not my job. Well, part of my job is the options, the basic introductory options course, which is separate from this. But here, again, I want to be clear. Okay, I teach this very specific techniques of covered calls, selling puts, and talking about portfolio insurance. Charles said that he is also in, that he enrolled through the VectorVest University. Charles, welcome to you as well. Keep an eye out for for that, for that email. Make sure you check your spam folder, and it'll walk you through how to get access. If I go back, I'll show you what it. I think it'll take me back there. I've been clicking this a lot today. There we go. So when you're in university.vectorvest.com and you've signed in, okay, this is what it will take you to. Now, this is mine, so I have access to all the coaching groups, and of course, I have access to all of the courses. Yours may not be as busy as mine is, but you'll see that you have access to the Retirement Portfolio Transformation course. Okay, these are all of our other courses and things, but it'll say either continue or start course, and that's what leads you here. Fantastic. Charles says he's already got access. That's wonderful.
And just a quick note for those that sign up and they don't see it, you typically just want to log out and then log back in to wait for the servers to refresh, sometimes depending on where you are.
Great. Yeah, yeah, because I do that as well sometimes. If so, I log into my university here, and if you do this and you're already logged in, just to repeat what John just said, if you see you're already logged in and you sign in online and join the course and don't see it, what John's saying is simply come up here, sign out, and then log back in again. That's what John's saying if you don't see that happen. So thanks for that, John. All right. I am going to stay here another few minutes, another couple of minutes, see if there's any questions that come through. You guys, if you have any, go ahead and type them in. Just look through here real quick to see if there's any others. Irene, I think we talked about the coaching group. I think we answered those. So remember, the early bird pricing is $5.95. That's still good through Monday at 5 p.m. This price here will last probably till around 8 o'clock, the $4.95. So if you want to take advantage of that, go ahead and log in now at vectorvest.com/transform. And you can take advantage of that. But if you do decide and you change your mind, you do have till Monday and still save from the $9.95 price of the course. All right, John, I'm just trying to kill another minute or two to make sure there's no one who's having things. Demetrius says he says he still doesn't see it. So Demetrius, you signed up for the course. You got an email with the directions to get in there. I'm making assumptions here. You said you had got through. You signed up, paid the $4.95, and you're saying you don't see it. Okay. So and you signed out as John illustrated or as I was illustrating what John said to do. You signed out of the university and then logged back in. I would give it just another minute. I did put in the VectorVest product support number in the chat box. It's 888-658-7638. Okay, if you have any issues, those guys are here. I want to say till midnight Eastern or maybe 11 o'clock Eastern. I'm not sure.
It's 11.
It's 11. Okay, 11 o'clock Eastern time. So Demetrius, I'm sorry there's an issue there. Maybe you're saying you did sign out already. Maybe give it a few minutes, try again. If not, the product support folks will take care of it and make sure that you have access tonight. Okay, I've already, before we came on, I went out there and advised them to be aware of some calls might want to come in. Demetrius, I here. Listen.
Yeah, yeah, that part is fine. That part
Yeah,
is fine. Don't worry. We have your name.
yeah. The one thing I can't, Demetrius, and just for everyone else to know, Demetrius saying he wants to make sure he gets the 495. That's one thing I can guarantee you that you'll get that. Chewy. Okay. All right, folks. I'm going to go ahead and sign off here. Um, give product support a call if you have questions. You can send emails or give a call about the course. Thank you for taking the time to be here. On behalf of John and myself and VectorVest, please stay safe, stay healthy. Let us know if you have questions, and we're here to help. Whether you take the course or not, we're here to help you. So, with that, I hope everyone has a great evening, and we'll see you guys soon. Bye for now.